Imagine waking up every morning with nowhere you have to be. No alarm clock, no boss, no emails waiting for you, no commute, no deadlines. Your bills get paid, your fridge stays full, and your lifestyle keeps moving forward, all without you actively working. Most people assume this kind of life requires millions of dollars, but that's not always true. With the right strategy, $500,000 sitting in the bank can be enough to support a comfortable, low-stress life if you're willing to be intentional. In this video, I'm going to walk you through 5 realistic ways someone could live off $500,000 in the bank and essentially do nothing else for income. These approaches range from conservative and boring to slightly more strategic, but none of them require starting a business, flipping houses, or grinding nonstop. Each one comes with trade-offs, and none of them are magic. But if you understand the math, manage risk, and live within clear boundaries, this amount of money can absolutely buy you years or even decades of independence. Let's break it down. Way 1. High-interest savings and treasury strategy. The most conservative way to live off $500,000 is to keep it in ultra-safe vehicles like high-interest savings accounts, treasury bills, or money market funds. In recent years, these options have paid anywhere from 4 to 5% annually, depending on market conditions. On $500,000, that can generate roughly $20,000 to $25,000 per year in interest before taxes, without touching the principal. This approach works best for someone with very low expenses or someone living in a low-cost country. The appeal here is safety and simplicity. Your money is liquid, protected, and accessible at all times. You're not worrying about market crashes, tenants, or complex financial decisions. The downside is that inflation slowly eats away at purchasing power, and your lifestyle ceiling is limited. But if your goal is peace of mind and predictable income, this is as close to do nothing as it gets. Way 2. The 4% rule with a simple index portfolio. Another popular approach is using the classic 4% rule. This involves investing the $500,000 into a diversified index fund portfolio and withdrawing about 4% per year, which comes out to $20,000 annually. Historically, this strategy has allowed portfolios to last 30 years or more, assuming reasonable market conditions and disciplined withdrawals. The advantage here is growth. Unlike cash, a properly invested portfolio has the potential to outpace inflation over time, meaning your money can maintain or even increase its real value. The key is not reacting emotionally to market swings. You're not trading, timing the market, or constantly adjusting. You invest, rebalance occasionally, and withdraw at a controlled pace. This approach requires patience and trust in long-term market behavior, but it allows for a hands-off lifestyle once set up correctly. Way 3. Dividend-focused income without selling assets. Instead of selling shares each year, some people prefer living purely off dividend income. With $500,000 invested in dividend-paying stocks or funds yielding around 3 to 4%, you could receive $15,000 to $20,000 annually in cash flow. The psychological benefit here is significant. You're not reducing your share count, and the income feels more like a paycheck than a withdrawal. This strategy favors stability and mindset over maximum returns. Dividend portfolios tend to be less volatile and easier to stick with emotionally. While dividends can fluctuate, many strong companies increase payouts over time, which helps offset inflation. The trade-off is that dividend investing may slightly underperform aggressive growth strategies in the long run, but for someone focused on consistency and mental comfort, this can be an ideal setup. Buy a modest rental property and live off net cash flow. A more active but still relatively hands-off approach is using the $500,000 to purchase 1 or 2 modest rental properties outright without debt. By avoiding mortgages, you remove the biggest source of stress and risk. After property taxes, maintenance, insurance, and management, it's realistic in many areas to net $1,500 to $2,000 per month or $18,000 to $24,000 per year. This strategy converts your cash into a real, tangible asset that provides ongoing income and potential appreciation. The key is outsourcing management, so you're not actively dealing with tenants or repairs. While this isn't completely passive, it can be close enough if structured properly. The main risk lies in location choice and unexpected expenses, but done conservatively, real estate can provide steady income without daily involvement. Way 5. Geo-arbitrage and low-cost living. The final and often overlooked strategy isn't about increasing income at all, it's about reducing expenses. By moving to a low-cost area or country, $20,000 to $25,000 per year can support a surprisingly comfortable lifestyle. Places with lower housing costs, healthcare expenses, and daily living costs make $500,000 stretch dramatically further. Conclusion: living off $500,000 in the bank while doing nothing else isn't about finding a secret trick or perfect investment. It's about aligning expectations with reality. If you expect luxury, constant upgrades, and zero financial discipline, this amount won't be enough. But if you value calm mornings, unstructured days, and control over your time, $500,000 can absolutely support that life when managed correctly. If this kind of life sounds appealing, then the real question isn't whether $500,000 is enough. The real question is how much freedom is enough for you and what you're willing to trade to get it.